So I have a lot of ideas, and you know, some of those ideas are better than others, and those ideas are, worse than most. But I don't really have anyone else to share them with, so I'm going to share them with you in a new segment that I'm calling Crazy Ideas. The fun part is that you, the viewer, get to tell me whether or not my ideas are crazy and why. So on today's Crazy Ideas, global warming insurance. Okay, now something like global warming is very difficult to insure because if it happens to everyone, which means, well, the whole point of insurance kind of falls apart. But here's an idea for that kind of situation, and tell me what you think about it. We allow for a sort of insurance marketplace. There would be a set of very specific and measurable criteria, like the oceans will rise X amount of feet within the next 10 years, or the average temperature over the next 10 years will be X degrees higher than it was over the past 10 years. And then anyone can go to the marketplace and basically take out an insurance policy on whether or not that's going to happen. So if you imagine the marketplace has $100 insurance deals, then how it would work is I'm coming in and I'm saying, I really think that the temperature of the Earth is going to increase, and I'm concerned about it, and I would like to be impacted by it less. So I'm willing to put forward $30 now if I can have $100 back in 10 years if it turns out that I was right and the temperature does go up and it sucks. And then someone else comes along and says, well, you're putting $30 forward. Am I willing to secure that insurance with the other $70? And if there is someone who's willing to put forward $70 now and potentially get back $100 if the bad thing doesn't happen, then they would put forward $70. Now there's $30 and $70 in an account somewhere. If at the end of 10 years the bad thing happens, then the insured person gets the money, and if the bad thing doesn't happen, then the insurer gets the money. And I mean, that's basically how insurance works, right? It should be legal. You pay a certain small amount of money to an insurer, and if something bad happens, you get more money back to help protect you from that bad outcome or recover from that bad outcome. And if something bad doesn't happen, then the insurer gets to keep the money. That's the deal with insurance, right? Or maybe that's why this is a crazy idea. I don't know. Anyway, most of the people I know are either 100% sure that global warming is a real thing and it's gonna happen and it's gonna be bad, or they're 100% sure that global warming is a hoax invented by liberals to get money to solar manufacturers. There isn't a lot of in-between space, so I feel like, you know, this is a way to make people put their money where their mouth is. And by doing so, you provide a fund for recovery if the bad thing happens. And you provide an incentive for the people who bet against the bad thing happening to stop the bad thing from happening. Both of those things are great for stopping bad things from happening. And if by some chance we're all wrong and there isn't a horrible world-shifting catastrophe, well, then I guess the people who are confident there was going to be a catastrophe lose some money. And reality keeps on moving, and the people who had the better foresight to know that that disaster wasn't going to happen can invest in sensible things like not catastrophe. Right? I think from both sides, this deal makes perfect sense. Or am I crazy? I could be crazy. Anyway, so that's the basic idea, and the reason it makes sense is that even if you put forth $70 compared to getting $100 back, that's basically breaking even with inflation, and that would be a really big spread. If you go more like 50%, it's actually a pretty decent rate on return, and since you're 100% confident that global warming is going to happen or isn't going to happen, whatever your political and scientific views may be, that's a really good deal. Now, the reason the idea really might not work is that if the certainty of each side isn't close to 100%, then the payoff isn't really worth the amount you have to put in. You could also mitigate that by saying, okay, and we'll take all that money and put it in an index fund or something conservative that will let it grow in value a little bit, which makes it much more worthwhile to do. Anyway, I'll leave that for the financial experts and other people to figure out once you all realize what an amazing idea this is. And if it's not an amazing idea, if it's a crazy idea or the stupidest idea you've ever heard, then tell me in the comments, because I'd like to know. Clearly, I have not thought this through. So tell me what you think. Alright, that's it for today. Just this silly little video. I'll see you soon. Bye-bye.